From Barangaroo Studios, the Ausbiz COB is the key stuff you need to know about the day in business and finance.
Well, hello. Nice to be here with you on this Thursday afternoon. I'm Nadine Blaney.
And I'm Juliette Sarli. Nadine, a pretty positive day on the market today, really kind of pushed higher by some of our tech players. We're up by 0.5% on the CBO 200 as we round out the day's trade.
Yeah, really interesting session as well. Maybe not so much as far as the market movements, because we're going to end up pretty much where we were just past 10 o'clock in the morning. But that jobs read, I think it's really, it's changing the conversation around rates. We'll let the last of the day's trades go through the S&P ASX 200. We'll keep you abreast of the markets, which, you gotta look, if you're talking tech, it's Xero, don't you?
Yeah, absolutely. We've said zero to hero here. It's hit a record after its numbers. Subscription growth slowing, but it does say it's not really worried about that because it did see operating earnings up by about 51%.
Mm-hmm. Now, so that's a pretty strong performance coming through. When we're talking about rates, we're talking about NAB breaking from the pack. Not necessarily all, because I think Paul Bloxham from HSBC had flagged that perhaps we won't even. There's a percentage chance we won't get any cuts through 2025. But NAB, the first of the big four to push its expectations from February to May on that jobs data.
Yeah, absolutely. So unemployment steady, 4.1%, but of course it is still a tighter jobs market than perhaps the RBA would be looking for. And we did hear from Michelle Bullock today as well that she was speaking rather before the jobs data was released, but once again just saying that policy is going to remain restrictive until they see inflation at their target. Let's have a quick look at those tech players. We mentioned Xero hitting a record today. WiseTech, TNE, Technology One, which I believe is reporting next week, also higher today.
Zipco, not so though, down by 2.4%. So we have heard from all of the big four banks now, with CBA's quarterly coming through. CBA up a pretty solid 2% today in the session. You can see the rest of the big four up by 1.5%, pretty much bang on.
Yeah, all right, quick look at the miners as well. There was a bit of weakness there, particularly from Fortescue and BHP. BHP down by 1% on the day's trade, and South 32, so those iron ore miners getting hit by a little bit of a weakness in the Singapore futures.
Our stock of the day, which was Xero, up by 5.3%. We've already said that we saw a pretty solid result coming through with net profit up 76%. And I thought it was interesting as well just to hear some of the commentary around AI. The CEO a long time ago said that they weren't going to spend willy-nilly on AI, be really targeted in how they do so. And then you go from AI to a very old school company, Orica.
Yeah, exactly. Now, its share price actually took quite a bit of a dive earlier, but it looks like it's going to close just slightly higher. We, of course, spoke to the CEO. Andrew spoke to Orica. You can find that interview on our website shortly.
Yeah, okay. Looking forward to that. New Farm jumped, even as it booked, a 29% decline in underlying earnings to $313 million for FY24.
And Cleanaway higher. The ACCC did raise some concerns, though, about its proposed takeover of the City of Melbourne council-owned waste business Citywide.
Mm-hmm. And another CEO that we spoke with, just while you're at it, if you'd like to go to ausbiz.com.au, if you're listening to this in podcast form, we spoke with Catapult and GrainCorp as well today.
Yeah, and also Scolari Partners, which listed. So
yeah, it was
very busy day on the CEO front. Let's welcome our guest to the COB, Mathan Somasundaram from Deep Data Analytics. Your take, Mathan, we haven't really spoken to you since we saw Donald Trump re-elected. How's it all faring out there?
It's you have to say, what they say, the mainstream media is going to struggle in the new world. I think with Donald Trump coming in, mainstream media is going to do really well. It's a gift that keeps on giving, and so far the appointments that I've seen in the last week, it's going to be feeding media for years to come. So I think it's going to be entertaining. I'm not so sure it's going to be that positive. I think it's a different time to what it was in 2016, 2017. So it's definitely fascinating time. Who would have thought CBA is going to be trading at a level where it's giving you less yield than US bond yields? So here we are. So it's interesting times.
All right, so we heard from the RBA's Michelle Bullock saying that policy will remain restrictive until they're very confident on inflation on a day that we saw the jobs market prove resilient. I mean, that's got to be the takeaway from it. For the RBA to hit its forecast of unemployment at 4.3%, CBA as well saying they are expecting unemployment to hit 4.3% in the fourth quarter. They're saying it looks like a really difficult number to achieve right now. And I know that's funny language when you're talking about job losses, but that's the reality of the situation.
It is, and 4.3 is phenomenally strong. And this is where people get confused. We got down to below 4%. The only time we've done that is post-pandemic extreme global stimulus. That's not a normal cycle. So if you exclude that, in the last 30, 40 years, anything near 4% is phenomenally strong employment market. Globally, this is a trend. And it needs to unwind. And because there's a lot of government spending, the job numbers are still remaining relatively strong. I mean, just to give context, we created 15,000 jobs. If your population adjusts that to US, that's 14 times. That's over 200,000 jobs per month. So that's, if you think of it in comparative to a non-farm payroll data, if US is printing over 200, it's a hot economy. So we do have a hot economy. I mean, I know people will say a lot of things, but at the end of the day, if we are creating anything over 10,000 jobs, we are having a very good economy, and we're creating a lot more over the last 6 months. So it is a hot economy. I think RBA has no choice but to remain on hold. They stopped too early. They will be on hold for a lot longer than most. In reality, RBA still has one of the lowest real interest rates in the Western economy. So we're not really tightening that much. So that means we have to hold for a lot longer. So I thought they would be on hold till at least Q2. The way the data is going, I think that's going to probably Q3 now. So they probably won't cut before the election.
Yeah, it's getting very difficult to predict. And as we mentioned, Paul Bloxham, I think he was the first to say maybe they don't cut at all this cycle, but that chorus is kind of growing quite a lot. Let's talk about stocks. You say New Farm bouncing on some short covering. It was one of the companies that came through with an update today.
Yeah, look, it's interesting. I mean, it kind of cuts into two sectors, in the chemical sector as well as the agri sector. And if you look at it compared to the other stocks, it's been a big underperformer in both sectors. So in that context, it's been taken a fair hit. And today's update, I mean, I think the shorts were around 5-6% from memory. And you know that unless the result is really bad, there was going to be short covering, and we've seen that come through today. It's an interesting one because I've been looking at this for a while because we like the agri sector, we like the chemical sector. And Orica's another one that had brought it quite well. It's had a really good run. It's fairly priced. Then you look at the agri sector. You look at GrainCorp's done really well. Elders has bounced back quite well, and I think there's a lot more upside. The weather is quite supportive for the regional economy and the agri sector. So all of those things are pretty positive. New Farm's been I suppose, the ugly duckling, and it's starting to show some support. So, it's something that we're keeping an eye on, because if that starts to show some traction and start to turn around, there's a decent run in that.
Well, you mentioned GrainCorp there. It was out with results as well today. So saying that it expects to see better volumes in 2025, but that market dynamics will impact margins. It also says that it's going to be providing guidance in February. Why were shares in GrainCorp down? I mean, pretty punchy, about 3.4% today.
It's had a pretty good run, and management have a track record of under-promising. You really don't want to hold that GrainCorp when management is talking, because they always talk like, oh, it's tough, things are going to be lower, because they always like to talk it down. And then, 2-3 weeks later, the share price goes up. So you can always make money selling before they talk and buy on the day they talk. And I mean, I like them for that purpose, because they don't overpromise, they underpromise and overdeliver. So I think that's good. I think that the interesting part about the food sector that the market is probably not looking at, and it's probably not the sexy catalyst in the trade war, is that if there is going to be a trade war, which looks inevitable with the new government in the US, China will retaliate. And historically, that hits their agri sector. And China's not stupid. They need to have other sources of food. So in theory, that should help us sell into China. and the market should get tighter on a global level. So if that is the case, then Aussie food producers should get a benefit out of that. Now, if that is, if those things kind of play out, then things like Breadcorp, things like Elders should benefit on the back of that. And the management is quite aware of it. They don't want to overpromise. Just play stupid, get your work done, and the market will do it for you.
I think also the cutting of that special dividend was a bit affected by the share price today. But we did speak to the CEO, and he mentioned, similar to what you were saying, Mathan, that food is always going to be needed anyway. So it's probably still going to be, I guess, quite defensive. What are you seeing in terms of other defensive plays? I know you're looking at Telstra being undervalued.
Yeah, look, I think there's a lot of defensive yield that's probably getting ignored in this market because it's not the big movers, and the people are getting excited by things that move 10, 15% a day. But, if you look at things that have been beaten up, things like APA, at the end of the day, whether you believe in climate change or not, APA is going to play an infrastructure play in the energy sector for years to come. And it pays a pretty good yield for you while you sit there. And that's come off quite a bit, and that gives you an upside in capital appreciation while you collect the big dividend. Telstra, again, everyone gets excited about, whether you're looking at robo-taxis to AI to data centers. Well, you want to connect to all of them? Well, you need a good infrastructure. And given all the issues that most other telcos have had, Telstra becomes the last man standing. It's the best of the bad bunch. So I think Telstra looks pretty solid here. And as the market gets excited with the market risk and so forth, and looks for a yield play, and yield is being undervalued at the moment, I think Telstra will recover. Another one to look at is rural funds. We've been talking about food. They're a property play on the agri sector for the agri sector of properties rental yield. So it pays a pretty good yield, and you're getting a defensive play. They don't operate their businesses; they just rent it out. So it's a good yield play to play, and you can look at all these things that's giving you a pretty good yield in different defensive sectors in the economy.
Mathan, I just want to get a quick thought on Life 360. I was speaking with a Pendle fund manager yesterday who said that when you're looking at a lot of stocks and earnings, once you see the worm turn a little bit, you want to be careful. You don't like owning companies in a downgrade cycle. Is this enough to, you think, make people reassess their really rosy view in many cases on the trajectory for Life 360?
You know me. When a stock goes into a multi-year upgrade cycle, and it becomes a market darling, and most fund managers are long to the gills, it delivers their first downgrade. The market wants to overlook it. They always overlook it, but that's always a sign that things are not going great. 360, look, market loves it. I don't see the moat in it, and once you start to see cracks appear, you have to be careful. And I think we've just had the first downgrade. If the second one comes, the panic will start. So you just got to be careful. You've done well. And so it makes sense for you to start taking some profit and managing your risk. This is an extremely expensive market. There are certain sectors that are running hot and the rest aren't doing much. So if you're in the winner, it just makes sense to take some profit and manage your risk.
Indeed, and we did speak to the CFO, Russell Burke, yesterday as well, so you can find that on ausbiz.com.au. Mathan, thank you as always. Mathan Samasandaram from Deep Data Analytics.
And we alluded to the fact that Xero was the stock of the day, so shall we take a listen to see what our guests on the call had to say?
Yes, indeed. Howard Coleman, Team Invest, Grady Wolf from Bell Direct joined Koshi.
See it in their numbers. Instead of trying to increase subscriber numbers by massive amounts every year, they've only very slightly increased their subscriber numbers in this report, but they're getting an extra $5 or $6 in average revenue per subscriber. Right. So suddenly the subscribers are now profitable instead of being unprofitable. So hats off to them, and if they carry on like this for another couple of years, it'll actually be a real long-term business, and our members will start getting enthusiastic about it.
Right, but not for you at the moment until they build a longer track record.
It's too short a track record.
For Xero.
The company, I've seen it in action. I've been at many workplaces where it is used. It's a fantastic technology, including here, another plug.
I in fact use it too, so I'm rebelling against the
product.
product.
The results are just phenomenal. And so what you want to see with a tech company is growth, scalability, low capex, low costs, and also diversification into other areas, which they've just done. So they've got AI is what you want to see for any tech company at the moment. If they're not talking about AI or investment in AI, forget about it. So Xero has just launched their beta products in the Gen AI space, so that they're coming through the market very soon. That obviously adds a lot of upside potential, so growth opportunity, revenue opportunity.
I don't know if we actually, did we get clear? Oh, yes, Howard said not yet.
Yeah, not yet.
And Brady's a buy.
Brady's a buy. But Nadine, are you suffering from crypto FOMO?
What a question to ask me, Juliet, publicly. I don't know. I think there's a lot of people out there that are a bit worried that they might be missing out on what's being called the new crypto bull run.
Well, do you want to know what your options are for getting on board what is being called the ultimate Trump trade?
Well, if I did, I'll tell you what I would do. I would register for ausbiz.co/crypto FOMO. We have put together actually what's turned out to be a really great panel to just walk us through whether or not it's too late to get on board, what you need to know if you do plan on getting on board, and how you can look at the varying positions to get on. So there you go, Crypto FOMO.
And Wednesday, November 20th, so that is next Wednesday, of course, free to register. Let's have a look at the market leaders on an up day today. I'm guessing Xero is going to be there, hitting a record high today. Weebit Nano also having a good session, up more than 6%. New Farm we touched on as well. Flight Centre up 5.3%, and corporate travel also getting a go. So some movement in some of these travel stocks.
Oh, nice pun. It's subtle. I like a subtle pun. All right, let's take a look at some of these laggards, shall we? West African Resources, Domino's, down by 5.6%. You can see there still gold coming under the hammer, and deep yellow in the uranium exploration space, off by 4.5%. One small company, I don't know if it'll be on the list, Juliet, but the Shaver Shop had a tough day. It saw its sales drop. That's one retailer that had actually performed quite well through this interest rate cycle, but got ahead of myself because there are some of the leaders on your screen.
MedAdvisor up 14%, Immutep and Bougainville Copper, Lindian Resources, all of the big small names.
Yeah, well, Immutep had some pretty good phase 1 trial results, I think, using one of their technologies for prostate cancer. I hope I'm not wrong on that front, but no, I did sort of read the headlines today. Flipping the page, let's see if Shaver Shop is on here. Nope, it's all in the resources space, including Patriot Battery Metals, which is off by 12%.
All right, tonight we get PPI, so factory price numbers, the weekly unemployment claims as well. Jay Powell is going to speak, and some earnings from Walt Disney ahead of a very big week of earnings next week. Of course, you've got the likes of Nvidia next week too.
Yeah, Walt Disney's always an interesting one because you get the theme parks, you get the cruise ships, you get the streaming service, so a real sort of 360 picture of what consumers are doing. Here locally tomorrow, you do get an assistant governor from the RBA, Brad Jones, speaking on an ASIC panel. And a bit of, actually, this is the Chinese data dump that's coming our way with home prices, retail sales, production, and investment. Also, Q3 coming from Japan in terms of GDP.
All right, let's have a quick look at where the market is, up by 0.5%. You've got a big fall coming through in materials that we touched on, also the energy, and a bit of a switch out of healthcare. But otherwise, it's been a very positive session, really led by those tech players, the likes of Xero, and just really interesting as well to see that movement in Flight Centre. I mean, that was one of our stocks we had on the boomer call, I think.
Yeah, and I will point out that E-minis, NASDAQ and S&P 500s are coming under pressure as we make our way, I suppose, toward the US Open. Still, we have some news coming out around the region. And one thing we didn't mention is Tencent. Had a bit of a jump after really strong Q3 results coming through again, which reminded me of a conversation I had with a Pendle fund manager yesterday who said, look, the thematic that she's most interested in right now, sounds counterintuitive though, is the Chinese consumer. And what, Juliet, I thought was so fascinating about it was she said because in China, they're really being encouraged to buy Chinese.
Yeah, right.
So the likes of Estee Lauder, nobody's buying. LVMH, nobody's buying. They're really being encouraged to buy Chinese domestic goods, and they do so through Tencent.
Yeah, right. Well, I can
Learn a
tell
new thing
you
every day.
that there's still demand for luxury goods out there when you look around at some of those stores. But that's a story for another day. And another day is Friday. We'll be back from 9:45 a.m. Eastern tomorrow.
Look forward to it.